I think if you pushed me and said, well, what's the second best? I would say the world wants two things. It wants crypto property as a savings account, and it wants cryptocurrency as a checking account. And that means that the most popular thing really is going to be a stablecoin dollar.
Michael Saylor, the co-founder and CEO of analytics firm MicroStrategy, is one of the most prominent faces in the cryptocurrency community. Currently, his firm is the public company with the largest Bitcoin holding. In addition, Saylor personally has around $800 million worth of Bitcoin. But everyone knows there are lots and lots of investment opportunities in the cryptocurrency market. Saylor recently joined the Lex Fridman podcast as a guest to discuss Bitcoin, inflation, and his outlook for the market. One of the topics discussed during the almost 4-hour-long discussion is Saylor's second favorite cryptocurrency. The host of the podcast asked the billionaire businessman if he would consider investing in any other crypto asset aside from Bitcoin. In response, the entrepreneur talked about some of the qualities he looks out for in a crypto asset. Please watch the video to find out the billionaire's second favorite crypto asset and the qualities that make a crypto asset a worthy investment, according to Saylor. Also, remember to give this video a thumbs up and drop your comments below. Enjoy the video.
I think if you decompose or segment the crypto market, you've got crypto property. Bitcoin is the king of that. And other Bitcoin forks that wanted to be a bearer instrument, store of value. It would be a property, a Bitcoin Cash or a Litecoin, something like that. Then you've got cryptocurrencies. I don't think Bitcoin's a currency, because a currency I define in nation state sense. A currency is a digital asset that you can transfer as in a transaction without incurring a taxable obligation. So that means it has to be a stable dollar or a stable euro or a stable yen, a stable coin. So I think you've got cryptocurrencies, Tether, Circle, most famous. Then I think you've got crypto platforms, and Ethereum is the most famous of the crypto platforms, the platform upon which, with smart contract functionality, et cetera. And then I think you've got just crypto securities. It's just like my favorite whatever meme coin, and I love it because I love it, and it's attached to my game or my company or my persona or my whatever. I think if you pushed me and said, well, what's the second best? I would say the world wants two things. It wants crypto property as a savings account, and it wants cryptocurrency as a checking account. And that means that the most popular thing really is going to be a stablecoin dollar. Right. And there's maybe a fight right now, it might be Tether, right? But a stable dollar, because I feel like the market opportunity, it's not clear that there'll be one that will win. The class of stable dollars is probably a $1 to $10 trillion market easily. I think that in the crypto platform space, Ethereum will compete with Solana and Binance Smart Chain. And I mean, the first question is what's the regulatory risk? How likely is it to be deemed a property versus security? And the second is what's the competitive risk? And the third is what's the speed and the performance? And all those things, lead to the question of what's the security risk? How likely is it to crash and burn? And how stable or unstable is it? And then there's the marketing risk. I mean, there are different teams behind each of these things and communities behind them. I think that the big cloud looming over the crypto industry is regulatory treatment of cryptocurrencies and regulatory treatment of crypto securities and crypto platforms. And I think that won't be determined until the end of the first Biden administration. For example, there are people that would like only US FDIC insured banks to issue cryptocurrencies. They want JP Morgan to issue a crypto dollar backed 1-to-1. But then in the US right now, we have Circle and we have other companies that are licensed entities that are backed by cash and cash equivalents, but they're not FDIC insured banks. There's also a debate in Congress about whether state chartered banks should be able to issue these things. And then we have Tether and others that are outside of the US jurisdiction. They're probably not backed by cash and cash equivalents. They're backed by stuff. And we don't know what stuff. And then finally you have, UST and DAI, which are algorithmic stable coins, right? That are even more innovative, further outside the compliance framework. So if you ask who's going to win, The question is really, I don't know, will the market decide or will the regulators decide? If the regulators get out of the way and the market fought out, well, then it's an interesting discussion.
Yeah.
And then I think that all bets are off if the regulators get more heavy-handed with this. And I think you could have the same discussion with crypto properties, like the DeFi exchanges and the crypto exchanges. The SEC would like to regulate the crypto exchanges. They like to regulate the DeFi exchanges. That means they may regulate the crypto platforms and at what rate and in what fashion. And so I think that I could give you an opinion if it was limited to competition under the current regulatory regime, but I think that the regulations are so fast moving and it's so uncertain that you can't make a decision without considering the potential actions of the regulators.
Looking to start trading cryptocurrencies, but don't know where or how to begin? BitKit Cryptocurrency Exchange is a great place to start your crypto trading journey. One of the top 5 futures exchanges on the market, BitKit is your one-stop shop for everything crypto. You can deposit, withdraw, or transfer over 200 cryptocurrency assets. BitKit features both spot and futures with competitively low fees and easy-to-follow instructions, so anyone can trade on BitKit anytime, anywhere. One very popular feature of the cryptocurrency exchange is its copy trading feature that allows users to copy the trading strategies of experienced traders. In the little time since its launch, the copy trading feature has attracted almost 20,000 traders and over 80,000 copiers around the world. With one quick click, you can begin your copy trading journey on BitKit and earn profits like any pro. BitKit offers users many other innovative products, including the possibility of trading without converting tokens. It also has a state-of-the-art security protocol, excellent customer service, and a dedicated derivatives exchange. Plus, BitKit does not require a KYC verification process before users can enjoy all of its amazing features. Start your profitable trade today. All you need is just to copy the trades of experienced traders. Plus, when you sign up with BitKit, you get up to $153 in welcome bonus. Get started immediately by clicking the link in the description box below.
Saylor has raised some pretty important points for investors to carefully consider before putting money in any crypto asset. Before choosing an asset, check out its regulatory risk. How high is the possibility that the government will ban it? Competitive risk. How does it measure up to other platforms and assets? Speed, performance, and quality of technology. How good is it compared to similar platforms and crypto assets? Team of developers and community. How invested are they towards the project? Security risk. Are you risking a vicious rug pull with your investment? With the current situation of the global economy, everyone should be asking these pertinent questions and investing in crypto projects that pass muster. That is the only way to avoid the coming storm. According to data released by the Bureau of Labor Statistics, U.S. inflation is at a 40-year high of 8.5%. But the Federal Reserve has promised to raise interest rates to fight inflation. They don't have a very good track record of keeping such promises. Michael Burry, a hedge fund manager popularly known for being the first to forecast the 2008 financial crisis, has stated in a tweet that the Fed has no intention of fighting inflation. Burry is the founder of Scion Asset Management and a famed investor. On Thursday, he tweeted, "The Fed has no intention of fighting inflation. Serial half-point hikes are for getting elevation before stocks and the consumer tap out. Same with rapid-fire quantitative tightening. The Fed is all about reloading the monetary bazooka, so it can ride to the rescue and finance the fiscal put," he added. Many other prominent analysts, investors, and fund hedge managers have warned that the Fed needs to raise rates faster than planned to fight inflation, but doing so will constrain the economy and possibly lead to a recession. Either way, it is an impossible situation, and the only way you can avoid the impending doom is to invest in a good crypto asset. What do you think about Saylor's interview? Be sure to drop your comments and observations in the comment section below. Also, remember to give this video a thumbs up and subscribe to the channel.